The Eurozone inflation rate has climbed to 2.3% in November, exceeding the European Central Bank's ECB target of 2% and marking the highest level in 4 years. This surge in inflation poses a new challenge for the ECB, which has been struggling to boost economic growth and inflation in the region. According to data released by Eurostat, the statistical office of the European Union, the inflation rate in the Eurozone increased from 2.2% in October to 2.3% in November. The main drivers of inflation were energy prices, which rose by 9.1% year-on-year, and food prices, which increased by 2.6% year-on-year. The ECB has been implementing expansionary monetary policies to stimulate economic growth and inflation in the Eurozone. However, the surge in inflation in November may prompt the ECB to reassess its monetary policy stance. Some analysts expect the ECB to slow down its bond buying program or even raise interest rates to combat inflation. The impact of the surge in inflation on the Eurozone economy is still uncertain. On one hand, higher inflation could lead to higher wages and increased consumer spending, which could boost economic growth. On the other hand, higher inflation could also erode the purchasing power of consumers and reduce their spending power, which could have a negative impact on economic growth. In conclusion, the surge in Eurozone inflation to 2.3% in November poses a new challenge for the ECB. The ECB will need to carefully balance its monetary policy stance to combat inflation while also supporting economic growth. The impact of the surge in inflation on the Eurozone economy will depend on various factors, including the response of the ECB and the behavior of consumers and businesses.